stock of the day, a huge one today, Macquarie Group flagging higher expenses in their quarterly report to support growth and investment as it fights off greater competition in the space. The bank says an improvement in overall market conditions contributed to a record quarter of profits. However, there was no specific guidance or numbers given for that record. Going forward, a boom in commodities and trading incomes are not deterring management's conservative approach. Chief Executive says the group remains liquid and well funded for the medium term. Boy, the market liked it, back up through $200 a share today, $8, 4.5%. Scott Phillips from Motley, what did you think of the update? Well, it didn't have a whole lot of detail in it, but the market really liked it.
I was going to say the same thing, Koshy. Operational updates is exactly what you think it would. Very light on detail, lots of motherhood statements telling us how things are going. I think this is the value, mate, of having a business that the market loves and trusts. And when you see a business like Macquarie that's been a real favourite of investors, and justifiably for a very long time, they come and say, look, record quarter, things are good, we're investing for growth. The market's inclined to take that on faith. And I think that is a real difference when you compare that with other businesses on the ASX right now, where even great news is still taken with a grain of salt. When you have that sort of track record, you've got that reputation, you really can do well on it. And as you say, shares up almost 5% at the moment on the back of that reasonably light detail. Basically saying a record quarter, tick, expecting good growth, tick, investing for growth, tick. Even as you say, the competition concerns didn't seem to sway the market, and probably justifiably so. These shares have been all over the place. You've got to look at the most recent dip you saw there. It's been a rocky old last couple of months for Macquarie, but it does seem like they're back on track, or maybe just confirming to the market that they are on track. Maybe that's the better way to put it. And the shares have bolted today.
Yeah. Would you still be buying them at these levels? And considering, like, ANZ's update was underwhelming. Westpac was the same. CommBank's out tomorrow. We've got Matt Common on the program tomorrow. It's sort of a bit of a stand-up out amongst its peers so far.
And I think that's why it's a buy for a lot of people, because you're looking around saying, well, if I want to be in financial services, I want to be big, I want to be blue chip, what do I do? The other banks haven't exactly covered themselves in glory. CBA's update will be fascinating to see how well they're going tomorrow. I think it is a buy on a bit of faith. I mentioned that before. You've got some of the smartest people in the country, all they're trying to make money for themselves and money for shareholders, going pretty much wherever they want to go. Remember, the Macquarie model, as we famously talked about it 15 years ago, almost doesn't bear any resemblance to the Macquarie of today, and probably today's Macquarie won't bear any resemblance to the Macquarie of 10 or 15 years' time, because they literally are going anywhere. They're finding opportunity to put capital to work, theirs or other people's, and make money from that for themselves and shareholders. That is a very, very potent mix. And as long as they can keep their noses clean regulatorily, as long as they don't make too many big missteps, they make small bets and then expand them. Very, very hard to bet against Macquarie. They're not cheap. It's 20 times earnings, but they're not super expensive either for what is obviously an investment bank, very different to the retail banks that we know. I think it is a buy still. 2.6% yield helps as well. At some point, you're probably going to have to pull away from that, but it might be another 10 or 20% higher from here.
Yeah. Chris, it's sort of a bank / private equity business, is it? Or a private equity dressed up as a bank. What do you think of the update? Did you come out of Macquarie?
No, I didn't come out of Macquarie, Koshy.
Henry did.
But
Henry did, didn't he?
Henry was there for 7 years. We were actually talking about Macquarie in our morning meeting this morning, and one of the questions posed, we recorded as a podcast, was, what is the stock that you would buy for your grandchildren? And 4 out of 6 of us said Macquarie. So it's one we've liked at Marcus today for quite some time. I wrote it up as a buy for 2021, so in the year obviously just gone. And the reasons why I liked it at the time were that the conditions for them were perfect. So money was cheap and still is cheap. There was a lot of distressed assets out there, and they are famous for picking up assets on the cheap and either then managing them and earning a clip or spitting them out and making a profit out of them. And there was a global economic recovery on the cards at the time, which we're still going through now. So the conditions were perfect, and here we are 12 months later, a little bit longer than 12 months later, and they're posting a record result. Again, light on detail, agree with what Scott said. They are famous, Macquarie, for under-promising and over-delivering. So I think that lends to what Scott was talking about with regards to credibility. When they say something like this, they don't say it often, so it does carry weight. And we don't even know what the record was. Was it record revenue? Was it record profit? Undoubtedly, we'll find out in due course, but they wouldn't say something like that unless it was significant. Shamira is a fantastic operator, as was Nicholas Moore before her. So, again, echoing everything that Scott said, the smartest guys in the room, they know how to make money. They have $750 billion worth of assets under management now. It was $500 billion not so long ago, so they continue to grow very aggressively. The formula is perfect. And even that part of the business that underperformed in the most recent quarter, they had the capital markets facing business, which is only 25% of their revenue these days, or 25% of their business. That was the thing that really picked up. So it seems that regardless of the market conditions, these guys are making money. So it's absolutely a buy for us here at Marcus Today as well.